18th. We're coming into the home stretch of trading this year. We had a big week last week. CPI for the U.S. Fed rate decision. We had the Swiss National Bank rate decision, the Bank of England rate decision, and the Euro ECB rate decision. Excuse me. So lots to digest from last week. I will show the screen here in just a moment, but let's begin with a risk disclaimer. We understand there's risk in trading. Please and always use trade capital only. Do not trade with money you cannot afford to lose. Whether you're trading stocks, options, futures, forex, cryptos, you know the risks. If you're following me out there on social media, make sure it's real me, real Chris Pulver. YouTube.com/Chris Pulver Mondays and Fridays. We will be business as usual this week with another session on Friday to wrap things up. And then I'm taking a couple weeks off to just decompress and get ready for a brand new 2023. Let's get into the charts here. First thing, just a year-to-date snapshot. Where are we at? NASDAQ, down over 30% still. We still in bear market territory? Yeah. NASDAQ still in deep bear market territory, negative 31.57%. The S&P is negative 19.17 as of last week's close. If it continues to get worse, obviously we're sliding back into that bear market territory, and that would take the S&P down 20+%. The Dow, I believe, at one point touched 20% to the downside this year, but has fought back a little bit with the value plays. Some of the bigger companies doing pretty well and holding their own, but still down 9.41%. The 10-year note, 3.48. We still have a very deep inverted yield curve with the 2-year, 10-year, which of course is one of those big precursors to a recession. Feelings are that we already have a recession, that we're already in one. We're just kind of refusing to admit it. Bitcoin down 63%, still trading, sub 20K. Tesla, interesting, negative 57.35%. What's up? There's some drama going on with Elon Musk asking about CEO status in Twitter this weekend. So anyway, let's get to the charts. So here's currency strength chart overnight. Things are pretty quiet. Forex news this week is way quieter than last. So let's go to this week. Take a look at the high impact. So this week, overnight, so Monday to Tuesday's trading, we have a rate decision from the Bank of Japan. Not expected to change rates or anything like that. We'll be interested to see what the press conference reveals, if anything. See if there's any big strength or weakness in the JPY this week. To kick things off, we have retail sales out of Canada. We have CPI data coming out of Canada on Wednesday morning. I'll be interested to see some jumps there. Consumer confidence out of the U.S. Wednesday morning at 10. GDP out of the CAD, PCE price index, another inflation data point on Friday. So pretty light calendar, all things considered. Maybe the CPI data for the CAD crosses. Technically speaking, the CAD's due for some strength. We've had oil rebound off the $70 lows, about a 9 to 10% bounce from the bottoms there. So pre-market on the SPYs trading at 383, so right where we closed essentially last week. I've been talking about this 390 level for a while. I said if we broke back below 390, look out below. The bears seem to be in pretty solid control here. So if this key support is breaking, path of least resistance may be a continued unwind to the downside. There's still, I suppose, a Santa rally, but I feel like we already experienced that. I think that this Santa rally was pre-done prior to the data we had last week, right? U.S. CPI, Fed, higher rates for longer, restrictive rates for longer. This rate, the CME Fed Watch tool, it did adjust. Let me refresh this. It did adjust where I believe the Fed is expected to be at the highest point around 5 to 5.25. We're looking for a 25 basis points hike come February and another 25 basis points come March of next year. May, possibly that pause. So March to May, if it stays between 4.75 and 5%, let me see if I go June or July. Yeah, I'm not seeing the Fed. There it is. Nope, that's the same, 4.75. Okay, so really 2 more rate hikes are expected. And is that enough to be restrictive? Is that enough to be higher for longer? We'll find out. But that's where we're at. So even Powell's comments last week were pretty much as expected. It's just I don't think the market was really that excited to be like, oh, the Fed is serious. They're going to keep raising rates and keep the rates higher for longer. But if you look at December of next year, the market is potentially pricing in a 25 to 50 basis points rate cut if we kind of tackle that inflation data. But statistically, it shows that the Fed doesn't want to ease too early and start to get off the restrictive rates without possibly stoking inflation all over again. So I think 2% is a very difficult task ahead. It'll be, I don't know, it'll be interesting to see if the Fed is willing to accept a, if the Fed funds rate is sitting at 4.75 or 5% and inflation is down to say 3%, say 4%, that maybe that's enough. But if they're really aggressive about tackling 2%, then it's going to be higher for longer. So that's the drama with the Fed, and it's been like that all year, right? Let me chime in here, see who's logged in. Looking at the chat. Oh, good morning, everybody. All right. Brad's in the house. Good morning. Chris, good morning. Ranjit, good morning. Gail, good morning. Craig, what's happening? Edward, Moach, and Don, what's happening? James, Jason, good. Yes, Donna, thank you. Nice. Nice to see everybody. All right, perfecto. Let's get into the charts. So I know for stocks and options this week, I'm going to try to jump back in. I had plenty of 12/16 expirations. Oops. So 12/16 expirations on my notes. Be adding some covered calls. Last week we had a decent week in stocks and options. We did have some full profit credit spreads that rolled in. So this is Build-A-Bear, Halliburton, K-Web. This is a couple of casino stocks. This is Las Vegas Sands and Wynn Casinos. Uber was full profit. TLT full profit. SLB took a loss on NCLH. I had a lot of covered calls, and so this week to spend off Monday, I've got a class at the top of the hour for equities on demand. I will be looking at all these covered calls. I'm going to try to get things recovered. Oops, don't do that. Try to get them recovered, lower the cost once again. Depending on the premium I can collect, maybe going out to this week, this Friday, maybe next Friday, maybe mid-January. At this point, I mean, there's really not a lot that we are going to see movement-wise, I don't think, other than maybe a drift. I don't expect there to be big movements in the stock market outside of what's already been established. So, we might have this aggressive sell-off here and then just pause for the next couple of weeks. That will be interesting to see how January kicks off, because could it go lower? Could it go higher? I would suspect that this is coming. I mean, realistically, I would be more in line with the probability of going lower in the stock market indices, the SPY possibly revisiting this low, okay, low or lower, and then looking to see, between 340 and 300 on the SPY. That to me is kind of my big bull window. I know that's a big deal. I mean, that's a 10% window. But like we talked about last week, the average bear market is 38%. The average bear market duration is about 15 months. So we've essentially seen a 12-month bear market, and the NASDAQ is down 30%, and the SPY is down about 20%. So is that enough? Well, I mean, it's not average. And, recession also is lingering. We could have an earnings compression going into Q1. So we will find out. But trading wise this week, I think volume is going to be a little bit lighter. I know I'm still running classes and stuff all week, but I'm looking forward to taking a couple weeks off and just kind of resetting and just following along, but just taking a little break from the trading rooms. But that will be on Friday afternoon. All right, so this week in currencies, let's take a look at some pairs. So like I said, I've got some stocks and options to review, get some more cover calls added in, double check and see if we have any expirations for 12/23. There might be a couple. I know I have a few 12/30s. If I take a look here, 12/30 expiration. So Airbnb covered call, I have 10 of them. So I've got SVXY, which I'm likely going to get called away for about $7 a share. SLV's a credit spread that's looking pretty good. A covered call, which I probably will not get it called away unless silver continues to outperform another 10% to the upside, which silver's been pretty solid. So we're getting some full income on these credit spreads, which is nice. What else? GLD, will likely have full credit on that credit spread. CLF, $19 call. That's fine. We've been trading around $16 on CLF. Snapchat, covered call. Just going to continue to lower it. Silver, once again. Netflix, let's see here, covered call. Yep, I'll just keep lowering cost basis on that a little bit. I actually might look at that this week and lower this. My break even is 295. Yeah, we were trading at like 310, 315 on Netflix, so I'll monitor that one. Also, I have an Intel covered call at $30. Yeah, so it's lighter. I don't think I have any 12/23 expirations. Oh, I do. I have a 12/23 $15 call on NCLH. and that's trading around like 14 bucks. So if I have to add more to that, I will. What else do I have here? IEF, that's a credit spread. That'll be full profit. So pretty light the next couple of weeks as far as expirations go. If I'm adding additional covered calls, I'm probably going out through the end of the year, 12/30 expirations, going into maybe January 20th expirations. So that's just a little option stuff. Currencies, let's get some setups here. Let's see here, more comments coming in. Good, good, good. Yes, yes, yes. Okay, nice. Okay, so currencies, let's take a look at Aussie CAD. Uh, Pullbacks. So Aussie CAD. Couple of things. We had this really nice low. We turned last week. We'll take a look at oil really quickly. Let's before we jump into currencies. Let's go dollar index, oil, gold, silver. So dollar index. Dollar index is off the lows, but until this trend line breaks, I mean, I was looking for the dollar index to still meander down towards this previous past resistance becoming future support. That's right around 103. I could see the dollar gaining some bid from there. If the dollar starts to break this trend line, we break this trend line, we pause over here. There is a nice monthly pivot on the dollar. So we could have some bullishness coming out of the dollar in the next, couple of weeks, but a lot of times when we get into late in the year holiday trading, thinner volume, the market tends to follow path of least resistance. So the dollar might just continue to unwind a little bit, but I'm looking for some pretty strong support on 103. 103, then break the trend line, then start looking for some support up to this monthly pivot. There's also a pretty nice breakout pocket there that the dollar could get back to around 108, 109. Oil. So oil sitting at 75.88. I'm curious if this little rebound in oil from this low around 70 bucks will get us into, if we had this previous high, does oil come up here to the high, maybe put in a bit more of a low? Do we have a range? Highs around 95, lows around 70, maybe a range on oil. If we see another move higher on oil, does that help the Canadian dollar? There's typically a correlation there. Okay. And technically, I think the CAD has some pretty strong alignments for some strength. We had some last week. I was short on the New Zealand CAD, made some profit. Short on the pound CAD, made some profit. Euro CAD's a good looking setup. CAD Swiss, good looking setup for this week. So that's oil, gold. Let's go gold, silver. Gold trading at 1791, and the stock that I'm trading is GLD with some credit spreads, and we're trading at 166. I've got credit spreads at 160.159. So 160 by 159, 160 by 155s, collecting some nice income on those credit spreads. Silver's been outperforming gold by quite a bit, which is nice. We're at 23.21 on XAG. If I go to SLV, that's a stock that I'm trading, and I've covered call at 24. We're trading at 21.38. So likely having some income roll in with some credit spreads, and then the end of the year having a $24 covered call, which if it does hit $24, I'll set a chart alarm here. If it hits $24 and I get it called away, it's a pretty large position, and it'll be up like $6 a share. So that would be pretty nice surprise. And if it's not this year by 12/30 expiration, hopefully this is something that performs well and continues to rally through January of next year. All right, let's go to Bitcoin trading at 16,639 or 16,693. Ethereum trading at 1180. Still pretty quiet on the volatility side of things, volume wise and market cap wise. I mean, we've seen coinmarketcap.com. Total market cap is 800 billion as opposed to the 3 trillion cap we saw back in 2021. So that is what, like a 75% reduction in market cap? Oof, that's crazy. So again, technically, if I go back to Bitcoin, if that's one of the primary trackers, which for me it is, bulls have to retackle this 21.5 level. Until then, I think it's we're kind of in a slightly. I mean, it looks like we could have a falling wedge of some sort, which may offer a squeeze potential. So if it high to low compression here, I mean it potentially is a bear flag and that wedge is obsolete. But if we hold these areas, if we go high to low, sideways, and we can't really break much lower, there might be a squeeze potential here to break this 21.5, put in a bit more of a bottom, and we'll see if there's recovery. What is it going to take? I don't know. SBF in jail maybe, some regulatory actions on just everything crypto. or some big pockets that are talking about, the value of Bitcoin once again. I don't know, but it's slow for right now. So I'd say you monitor it, set your chart alarms, and it's risk capital, as I've said from the very beginning. Okay, all right, let's go to some currencies here. Aussie CAD. So I would like to see this if the Aussie CAD can continue to dip a little bit, in this area. I'm looking for a buy off of 9,000 and then returning to the highs around 94. So if it stays where it is this week, I'm not going to touch the Aussie CAD. If it comes back to 9,000, I'm interested in buying it, trying to retackle these highs. So that's the one thing we can look at. Aussie Swiss, I'm looking for a trend line break. So we have equal lows right here. We might have a range trade right back up towards 64.50. I'm looking for a break of that 64.50 to be a much bigger relief rally to the upside. But again, right side of the trend line needs to happen. If we don't have that, then we're clearly just following this downtrend. There is a major level of supply and demand. It's actually demand down here, this big pocket around 6,000. I'm pretty interested in buying more Aussie Swiss if it's offered, and then trading the right side of the trend line back up towards 65. So just targeting some big areas on this one. Aussie yen, no trade. Aussie New Zealand, we had a nice, kind of double low around 105. We have some oversold conditions on the daily time frame. We have some really nice pockets, hopefully coming back up in this 107, 107.50 zone. So I'm currently long in the Aussie New Zealand. I realize that I could be early. This might continue to slide lower. But on the right side of the trend line, I'm going to be long on the Aussie New Zealand. There's also some really nice pockets that this currency pair tends to find. Aussie dollar. This is kind of a interesting situation with the dollar index. We have a monthly pivot just slightly lower, but recently we've been maintaining kind of this dip by the dip by the dip by the dip. So if we have another push to the upside, there's not a lot of data this week. But if we have a weaker dollar, I could see the Aussie dollar maintaining bid and getting back towards 69, maybe even 7,000. Right? If it's dollar strength that prevails, then we just have this flush from last week, a little pause, and then a drop into this monthly pivot area between like 66 and 65. So it really is kind of a toss-up trade this week based on the dollar index. CAD Swiss. CAD Swiss starting to move nicely off the lows. We have a bar count. We've got pockets. We got pivots. We got all sorts of stuff. I'm holding long on CAD Swiss towards this high around 71.60. Yeah. So I'm going to try to get back to this pocket zone. We have a monthly pivot, and I'm looking for a trend line break. So if CAD Swiss can get on the right-hand side of this trend line, gravitate back towards this other one, gravitate back towards this liquidity level around 7,200. So I'm long on the CAD Swiss right now. CAD Yen, we already took profit, no trade. Swiss Yen, so really nice sell-off last week for kind of an engulfing candle, retreating somewhat today, but we're still watching, BOJ intervention levels. There's the high, there's the low. If we can break this low, I projected to move down towards 135.82. If we come back and revisit the high, I'm looking for a chance to sell this nice and high, trade it back down to the BOJ intervention low. So just a range trade on Swiss Yen for right now. Euro Aussie. We talked about this one last week. The ECB had some really nice flow. Christine Lagarde said things that the market thought was hawkish. So if the Euro Aussie pulls back here and continues higher, look for that breakout. So previous resistance could become support. Maybe a nice short-term opportunity to buy around 157 and then take it back up to highs or higher. 1.60 would be a round number, especially if we continue that path of least resistance to the upside. Euro CAD, bit of a pullback. We had highs around 4,600. I told traders I'm looking to short between 46 and 47.50. Bar count wise, I'm thinking that we've got to be close to that 1 hour. Yep. So this one, so here's what I'll look for. We have a decent bar count that I'm pretty interested in, but I'm not going to short it now. It's only about 50 to 60 pips to that target. What I'd like to see, if possible, this is my target for the week. If we pull back to the same high, I would short that same high, which is around 4,600. Short 46, take it back down to that red line of that 200 EMA, and that might clear you up for about a 200 pip move. But if it just drops down to hit the 200 EMA, then no trade. Euro Swiss trading at 99. Hopefully we see a nice little run above parity at 1.00 and a move above this 200 EMA. I'm bullish on the Euro Swiss, trying to target 105. Euro Pounds, no trade. Euro Yen, we're just kind of clinging to this buy zone. So deep pullbacks, but support is being held, possibly this little channel to the upside. So we may head higher into 148, maybe highs at 150. We have the BOJ press conference tonight, Monday night to Tuesday morning. So we'll see what the overall strength chart does for the JPY. Euro New Zealand, we've taken profit on this. We sold it at 71. Really nice spot off this break, retest, and we had a chance to sell this all the way down for about 700 pips. Last week's ECB, we're short-term trading Euro New Zealand to the upside. Euro dollar, we're above 105. So far, holding pretty well. Couple things. If the dollar gets weaker, this drifts up into 108, possibly higher. If the dollar gets stronger, it's an easy play down to this monthly pivot, which is around 102. So, the dollar could jump up and be strong really quickly, especially with a 4+% interest rate. That's a pretty attractive currency for a yield. If there's going to be kind of the carry trade opportunities where things slow down, bigger players start to park money with favoring positive carry and yield, the dollar might be one of those pretty solid candidates. So we're holding above 105, which is great. But like I said, a very quick sharp trend line break could easily get us back to 102. Okay, let's see here. Good on everything? Yep, okay. All right, that's euro dollar. Pound crosses. Pound Aussie. So I sent out a video last week for Master Flex in the trading room. I like this trade. I like this Pound Aussie. If you're selling high, looking for the Pound Aussie to come back into a range around 76. So I want to see some confirmation on my Master Flex system, which would mean we're just looking for red to align and look for bearishness to align. And it's a pretty tight stop considering a reward of, probably 500 pips or so compared to maybe a 1 to 200 pip stop. So I do like that Pound Aussie setup this week. The Pound CAD. Pound CAD, we already sold it. It was a nice little 1 hour bar count plus 4 weekly pivots. Took advantage of that last week for a nice little scalp. This is one that if it pops back up, I'm still looking for a bit of a high. Maybe some divergence, a topping pattern, and I'd look to see if the Pound CAD can drop a little bit. If it just drops more, where it's like, okay, we top there, we start to fall, then obviously I took profit too early last week, but I wasn't trying to risk it. There's a nice pocket back here in a pivot cluster around 1.60. So if I am short, if I get alignments to follow short Pound CAD, I like 1.60 for a target. That's 600 pips away, by the way. Pound Swiss. Let's see if we can break this high. We're having higher lows. Maybe this is a channel where it starts to hold the dip and then make its way back up. I'd like to see if the Pound Swiss can get to 120. Pound Yen, anything here? No. Pound New Zealand? No. Pound Dollar. We've already taken profit at 120. We had a little extra gravy on top at 124. This might be a buy the dip scenario, but also, we've made our way back up toward this starting point. If we have one more dip to buy, I get it, but we have a weekly or a monthly pivot rather that looks pretty attractive right around 1.18. So any type of structure break, if we get like aggressive trend lines in here, we have a bear flag perhaps, I could see the pound dollar dropping towards 118. But again, dollar strength will be what we have to watch. So watch the DXY, watch the US dollar. New Zealand CAD, took a short on that last week, made some nice profit on it. I'm done with this trade for right now. This is another one that if it, it creates a high, maybe selling that top once again and going after a deeper pullback. Excuse me. Going after a deeper pullback. If it just starts to unravel to the downside, that's fine. We already took profit last week, so I'll be waiting for it to settle back in. I think if the New Zealand CAD settles back into around 8,300, 84 to 8,300, looking for a chance to buy this. So we've made our way from this high all the way down, all the way up, and we could have a nice support level to buy a higher low. New Zealand Swiss, I've already taken profit at 6,000, no trade there. New Zealand Yen. If New Zealand Yen breaks down, we do have a Master Flex deployment waiting. If it breaks below 85.40, just looking to tackle some of this. Right? Resistance at the highs, support at the lows, all the way back down to 81. So if it gives us confirmation, I like that sell trade. New Zealand dollar, 63.72. We will see if there's room to get up to this pocket and continue to buy the dip on the New Zealand US dollar, or if dollar strength is high to low, pause, and then pushing lower towards this monthly pivot. The dollar pairs have a lot of pretty enticing monthly pivots where it shows some dollar strength. But that's what I'm going to look for as far as technicals this week. Dollar CAD. No trade on dollar CAD. Dollar Swiss, 93.22. I'm still long on dollar CAD. I took a small trade last week near the lows. I'm sitting with a break even around 94. There's a nice monthly pivot, as I've talked about, and a pocket. So, even near term, if the dollar Swiss drops a little bit lower, I'm buying it. Okay. And more confirmation, I'm buying more of it. More confirmation, I'm adding to it because I think the dollar Swiss will come back to this level, come back to this pivot, come back to this pocket. And that's a really nice chunk of profit that I'm after. So if it turns sooner than that, great. We turn sooner. We get back to the profit levels earlier. If we go lower, 9,100 to 9,000, I'm pretty interested in buying, testing waters around those levels, and then adding to the right side of the trend line for some profit. Dollar yen, no trade. I mean, dollar yen. We look. We did a good job waiting for this. We were aggressive in this area on dollar yen, took our profit, and that was good enough. So now I'm just gonna wait it out, right? Peso, krone, some of those exotic pairs. Singapore dollar I'm watching. Turkish lira. This thing ever turned? Look at this Turkish lira. Never ever turned. Oh well. TNX 10-year. Let's look at that. Let's look at that 2-year versus 10-year. So the 10-year note is at 3.56. The 2-year, that's the USO2Y. US02Y. Yeah, there it is. 4.22. Wow. So about a 0.7% inverse yield curve. So I mean, we're deeply inverted. It's like Top Gun style. 2 and 10-year. There it is. I think this is one of the longest inverted yield curve we've had as well. Look at that. I mean, this started back in. If I go to max here, I mean, we had a couple of tests and dips. I mean, it only goes back to like 2018. But you can see when we have this like threatening yield curve, it's like a split second. And this year it's like just crossing the line and just awful, right? Like a very deep and longer lasting yield curve. So yeah, about 7% or a 0.7% rather. So, if it's any indication like it typically is, recession is on the table. And, when and how long, we'll find out. But like I said, some can argue that we're already in one. Okay. Any other charts you'd like to take a look at? We just reviewed A to Z for currencies. We reviewed some of the stocks. I'm talking about expirations and stuff this week. It's fairly quiet management wise. I'll just be doing a lot of covered calls most likely, and see if I get a couple things called away. We added some new credit spreads. We go to equities on demand. Go to our tracker. We added some new trades, some material plays. So United States Steel, which is X, and CLF, which is Cleveland Cliffs. This is a bank we took some ownership of, FLO. So a couple of new trades. I like defensives going into next year. I like financials going into next year. I like materials. Energy is probably a little bit more volatile sector-wise this year. Let me see if I can find the sector performance year to date. Waiting. No, I'm just looking for performance overall. Parity. Yeah, it's 1.00, David. Any currency that's 1.00. So example, dollar Swiss. If the dollar Swiss gets back to 1.00, that's the dollar Swiss being at parity. If the dollar yen gets to 100.00, that's parity, right? It's just an equal, and it's just a big round number. So the dollar, the euro dollar this year getting to parity was a big storyline, right? We haven't been at parity since 1980 something. So I mean, it's just a noteworthy price, and we've seen a lot of fluctuations in exchange rates this year. So that's holding. Let me go to overall performance, tools, sector tracker. There we go. I'm just looking for year to date. I'm pretty sure the energy is the only performer that's in green. Yep. So energy still at 52%. We might have a bit more of a contraction coming in energy, and we might have. It's going to be interesting to see what picks up the slack. If energy starts to dip at all, then we may see. I mean, honestly, all the ones that are like barely losers for the year, like consumer staples, which is defensive, utilities, which is defensive, materials, industrials, even healthcare. I mean, these aren't bad sectors to be focused on going into 2023. I think it's going to be a pretty slow move. I think options will be a great way to trade in 2023, especially with your stock portfolio. To number one, lower the cost. Number two, actually make some money during a sideways or down market. Then of course, following your currencies and trying to find some good setups. Okay. All right. So any questions? We good? If that'll wrap it up, then yeah, it's opening bell. I'll start throwing in those covered calls and stuff in the stock portfolio. I'll see equities on demand students at the top of the hour. I've got a wealth and freedom class today. Got some other meetings, but trading rooms this week: Tuesday, Wednesday, Thursday for flex. Equities on demand all week. And we'll be back here on Friday to wrap up the poll report around 9:30. Depending on my Friday morning schedule, I might have an opening bell session at 9:30 as opposed to 9, but just look for that on the YouTube channel. Okie dokie. All right. Before you go, everybody, if you hit the thumbs up button for me, please support the channel. Make that algorithm smile. Make me smile. Let's have a good week. Okay. Let's have a great week. And we're getting into the holidays. So, like I said, holiday trading is typically a drift. If we've already established some direction, expect that direction to continue. If you have, so basically this: if prices have been doing this, expect it to keep going. If prices have been doing this, expect it to do the same thing. Expect, if it's going lower, expect it to go lower. The only exception would be if we're going sideways and we start to make a breakout, then that breakout typically has some legs. There's not a lot of opposing forces in holiday markets. So path of least resistance, just think about that. Follow what you see. Follow the trend. Okay. And we'll wrap it up this week. And like I said, after this week on Friday, I'm gonna shut down the poll report for a couple of weeks and enjoy the holidays. Have some travel plans from the 26th through the 6th. So it'll be a light calendar for me. No trading rooms, just Telegram updates, maybe some video updates here and there if anything sticks out in the market. But just like everyone else, enjoy the time with friends and family. So let's crank it out this week. Let's have a good week, and I'll see you in class, see you in the trading rooms. All right, thanks. Bye.